Hi, this is Shane with the Rational Trader. It is Monday, October 8th. A very, very active day. This is the daily chart. So we've had 3 successive down days with the real bloodbath starting on, was that Thursday? Yeah. So our average daily range is now well over 100 points. We're at 107.93. Today's range was in the 160 range, 160 area. Very, very active day. So for the small account trader, these are dangerous times. My loss was where is it? That's not it. Hold on. Here, 265. One of the things we were talking about in the room was because the moves are so big, and the market's never really spending much time in any one spot. Should we not use the special processing we've developed at low volume nodes? These are really intended to take advantage of the cases where the low volume, the market just kind of bounces off these nodes or blows through them. But it's really more for quieter times when a low volume node has some real meaning, as opposed to something that just got set during a drive-by shooting as the market screamed higher or screamed lower. And so I left the processing in today, and my result was minus. You just saw that in dollars. It's minus 12.50 in points. Just for grins, I took out those codes to see, well, what would it have been like if I'd just done my normal thing, and the result's the same. So at least today it wouldn't have mattered one way or the other. The fact is that when we come in, the overnight range is over 60 points. The market's extremely active. These are dangerous times. What we know from the data is that it's basically a coin flip if you're going to take a max loss, or you can do really well if you catch it right, because the moves are so big. But you're in dangerous waters here. These are category. It's a Category 5 hurricane here in the markets. So it would be wise to stand aside. And what I've been doing lately is, I look at the overnight range, and that'll give me a very good indication of what's about to happen. But then I watch it for the first 20 or 30 minutes. And you can usually tell if the market's really active. It might be better to just stand aside. I don't quite have that completely quantified yet, but experience was telling me today, this is going to be a wild day. So we'll see how it continues. I might start getting even more conservative, or just standing aside if I think that it's not worth it. In the meantime, I'd kind of like to collect data on how the system behaves in this environment, because this is potentially not an opportunity that comes along all that often to see these conditions live. So we'll see. It doesn't seem that way, because the volatility has been pretty high here for quite some time. But before this, it was years and years before you saw volatility like this. So one of the things we got to be careful about is optimizing the system for crazy conditions, and then when things aren't crazy anymore, they you've optimized for something that is no longer valid. In the simulation here, you did similar. Tomorrow I have what's going on here is there's a new model architecture that I'm working through a variety of experiments as I work towards sort of revamping how the machine learning system makes its predictions at the different locations. So tomorrow will be a different one, and then even there's another one already lined up behind that. So that's all planned out. It's just a question of what kind of data do I get, whether I move to the next stage or not. Okay, so that is it for today. We'll see what tomorrow brings. I would not be surprised to see further craziness. Let's see. Let's take a quick look at the daily chart again here. the last time. So this is a pretty scary down day here, right? So you can see there and there. In the past, there again. Those are huge days. Up in the past, these have been bought. This was insane volatility here. The market falls off and it's been bought. It's been bought. It's been bought. It keeps getting bought. So typically the way it works is you get a sell-off like this, and people that are highly leveraged end up having to meet margin calls by selling more, and that's why it continues. And so it can get really ugly even 3 or 4 days after it, because that's when the margin calls are hit. So you could see another just brutal bloodbath before it finally peters out, and then the market picks up again. By the same token, that's a solid sell signal. All right, all of these were. Those are it's called a hedge fund sell signal when you break the low of the high. You break the low of the high bar. This is the high bar up to that point. There's the low of it. You close below it. Same thing here. Right there. You close below that level. Close below that level. So we'll see. The market's this has been an insane bull market. So we're seeing crazy volatility. It's just not clear yet how it's going to play out. Whether it's going to this is a function of anxiety, and which way is that anxiety going to resolve? Is it going to resolve where we're continuing higher, or is it going to correct hard and then go back to normal? We don't know, so we just have to take it day by day, and dangerous times call for careful choices.